is a Tuesday, and you know that is always a busy day right here on the Tom O'Brien Show. Taking a look at the newsletters tab, we're going to go over right now to the opening call newsletter by Basil Chapman. Now, I always sing this newsletter's praises, which it deserves. Basil Chapman, of course, has an immense amount of experience in the markets. I've really enjoyed his input, well, anytime he's on, but certainly since that massive high volume low we had in April. Check out the opening call newsletter. It is very thorough. Again, another value added is you get a fantastic about hour-long video Fridays or Saturdays, wherever it might be, that kind of go over everything that happened in the market that past week, and then it has a look forward for the week after. Additionally, you have some subscriber live webinars that you get access to. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. How are we looking in the markets? I know the Dow is actually off a little bit today when everything else seems to be green.
That's because of United Health. United Health took a dive as it always seems to do, and it's, I've been hearing for years. My wife's former physician, so I used to hear about United Health all the time, how terrible they were with the patients, etc. Anyway, that's been proved today, and it's dragging the Dow down, but the Dow's not everything. We are long the Dow. We've been long for quite some time, so we're fine with that. And I have a target of the 42,821 high of late March as a target in the shorter term in the next week or so. But this is very important to me. So I'm looking at finally the weekly charts are starting to kick in. Yep. And that's very important. This Friday is going to give me a tremendous amount of information. But if you look at the strength of this single leg A to the upside, well, it's actually a B in the weekly chart. Look at that. It's a powerful move. But the MACD hasn't turned positive yet. The 9-period moving average hasn't. But if you look at the S&P, SPX, there we go. If you look at the S&P, it's improved a lot. You can see that pink 9-period moving average in the weekly chart is so close to crossing positive. And look at the distance from the 48.35 low to the 61.47 high that was made a few months ago. Look at where we are. So this, to me, I consider this to be really excellent action. And I've been saying for weeks and weeks, months actually, that you've got to consider that Trump uses everything that he can as a lever in which to get a 1% victory. That's 51%. That's all he needs. And he considers it a victory. And all of those people, every single economist that I met or I listened to, I mean, you must have had 90-something% economists talking about the biggest recession, etc., coming up. And when you get that number of economists all agreeing, you say to yourself, I must look at the other side. So that's what we've been doing. So we've been very positive about this market. I thought just in this very first segment, I wanted to go, the Dow's still positive, the S&P is stronger, the QQQs are even stronger than that. But most importantly, it's the rotation through the different sectors. So I'd mentioned to you AIQ, which was written off just a couple of months ago, is 5 or 6 years' time. Look at this. We've been long for some time, and we added to it. It's trading at 40.83, and look how nicely it's come back, almost very close, within a couple of points of the all-time high.
Absolutely.
That's very important. That's the Global X Artificial Intelligence.
Yeah, Basil, please stay right there, folks. We'll be right back with Basil Chapman after the... Welcome back, everybody. Joined right now by Basil Chapman of the Opening Call newsletter. Additionally, you can check him out here on TFNN for the Tiger Technicians Hour on at 10 a.m. Eastern Time. Basil, taking a look at AIQ, Artificial Intelligence ETF, and I mean, what you said right at the end there. I mean, we are getting close back to, these December, mid and November levels in a lot of these ETFs. I mean, this is wild, huh? Look at, I guess it's for Feb 18th. And AIQ, but point being is a lot of these big ETFs are getting right back near the highs.
Yes, and that's really important. So I always say the chart will tell you a lot more than the newspapers, thank goodness. So this is very important. I suspect that I've got a date around about the 23rd or so. By the 23rd, we should test the 42.78 high of the 18th of February. We're not that far from it. It could be sooner, but this is the pattern that I've got. But that's just one aspect. Another aspect is that I've spoken to you about this for some time. I've been saying General Electric, which should have been hammered if this was going to be a major recession. It should have just been clobbered. I mean, really. And here it is, trading at 221.91, up to 96, all-time high. I'm a little concerned. It made a 220 round number open today. So on a very short-term basis, it's done everything that I want. We are long, but it's done everything that we were looking for. The stochastic is still, look at this flat. This line is like a straight line for weeks now at 95%. The on-balance volume, this blue line is suggesting, the daily is suggesting that it's a little bit overbought. The MACD is still, to get this MACD to cross negative, you'd have to have a major sell-off, and to get this green 914 to go under the black 14, the 9-period moving average to go under the 14, you'd have to see a move down to about 192 in General Electric. So that's kind of, to me, this still remains a very big positive. All-time highs. Look at this breakout in the weekly chart, and because it went below the double bottom of 159.60 in December of 2024, and then the retest 2 months ago at 159.46. Now it's made a new high. This 146, even though it's only 14 cents below the previous low, starts a brand new buy. I can't believe I'm even saying this. A brand new buy signal, and it's only in leg A. That portends higher prices for 2025. So that, to me, is a GE Aerospace. But to go with that, there's a chart that I've been discussing for some time. And that is, let me just get it right here. And that is, it's just two price movements you've got. Let me get it. There it is. So this is, the pink is the XLF financials, and the blue is the S&P, the SPY. So these are two ETFs, basically. There are no moving averages. There's nothing. But I measured the move from the 2020 low to the high of 2022, back down to the low of late 2022, and then back up to the most recent high in April. And look at this. Each one of, look at the pink and blue pattern. Each low and each high is just within either exactly or within a month of one another as lows and highs. So this, to me, is just two price movements, the XLF financial and the SPY. But wow, it's amazing. Look, and the distance from this low in 2020 to the high of 2022 is exactly the same as the low from October of 2022 to this April high.
Yeah.
And the high that was made back in 2021 on the way down is exactly almost within $1 of the move to the downside here. And here we are in the upper range. So to me, this is, if we were going to go into a big depression, the financials would have been way, way lower with the S&P. So to me, all of this is these are positive actions. To see the financials moving like this is a really important thing. So let's get back to what we were looking at here. So I'm still very positive of the market, just very short term. I think we're just beginning to get a little overbought, and I think we should have some kind of a dip in the next day or two. But I still think that maybe we're going to make those highs, and I've got those. I'll show it in my show tomorrow in the Tiger Technicians Hour at 10. I'll show the left side, right side price movements that go back to previous highs. We've seen that now in the lows where you get double bottoms, and that's going to be very important. Even GE made this 159.60 low with 159 double bottoms. So these are very important technical aspects that I look at. Then I thought what I'd do is I'd look at, so I've been talking about General Electric as very important, but I've also spoken about Robin Hood. Yeah. This is the general public. I might be wrong, but this is the way I've looked at it for some time. We've been long from the 16s, and here is, we've had different positions. This is at 63 right now. Yeah. Within a couple of points of the all-time high, I've got this measured move that says, if I'm correct, then by, what's the date there? By the 16th of this month, we should be testing the high of 66.91 that was made back in February. So, and this to me is really important. You had mentioned the Bitcoin. Bitcoin, I'm still looking at this very positively. We've gone to a peak E. We've broken the a technique that I've talked about. It's called the Chapman Wave Inside Track. In this case, the repellent zone, because the lines were going down. Once you break above it, you start looking at the left side peaks as places to tackle. So 110,975. We are still long this. 110,975 was the all-time high, pulls back to the 75,000 area, and now it's at 104, and it's still acting pretty well. And I've been saying that there's a chance that this is looked at kind of as now a more official currency for really big institutions, maybe even countries. And the other thing I wanted to just mention is in the gold, we've now started to take quite a bit of the position off of the physical gold. You see this potential bottom right here, this double bottom in the gold. But look at the GDX, and this is the miners. The miners went below. This is the second day they've done. This is a pattern I'll talk about it. I can do it tomorrow in my show. The target, I don't think we've got time right now. I'll just show it. This is a pattern where it comes down sharply. It looks like an H, and then it turns over and it makes a lower low. It did it twice. This is the second time. And it's this pattern here. And what happens is if, excuse me, if the GDX it's at 45.63, 46.62, if it actually starts to trade under 45, you don't really have much support here. So this is a very important moment for both gold and the GDX. And actually, you've got the dollar moving up quite nicely. Not great, but it's, oh, let me just type it in here. The dollar is moving up a little bit right there. It's just the start of a move to the upside, but it does say, if you look at the traditional counterpoint, which we haven't seen for a long time, where gold goes up and the dollar goes down proportionately, there's a chance here that the dollar could go a little bit higher, and that would make gold a little bit weaker. I don't know about getting out of gold completely for our physical gold that we have, but we have taken quite a bit of profits off that. So overall, very positive, the market. Short term, I'm just thinking we're getting very close to some kind of, at least a digestive phase. But that, whether or not it's going to be a new buying, an opportunity to buy, I just don't know yet. I think it will be, but I would go for the stocks that are already moving very well. But just as informational, just to look at this in terms of having been a failure, the IWM Russell 2000 just all year, it just made that high back in November of last year, 244, double top from the November high of 2021, and now for the first time it's just starting to improve. So I think if we get this rotation into other areas, it's going to give a lot of opportunity, even if there's a bit of a pullback in the leaders shorter term.
Absolutely. Basil, thank you so much for coming on. We'll see you tomorrow morning at 10 a.m.
Thank you very much, Jacob. Have a good evening.
You too, Basil. Folks, if you stay right there, we'll be right back with another guest.